Mike, fantastic to get you on Real Vision finally.
So excited that I'm here. Thank you for the invitation.
So listen, first give people a little bit of background. We'll go through all of that and we'll go back in time before that, but just what you do now, because you do a bunch of things.
Indeed. Yes, it's been a busy month, but last 13 months, just a really exciting last few years, frankly. So over the past year and a half, I transitioned from running The Block, one of the leading media research and information businesses in the crypto space, to Paxos, where for the past year, I've been working as VP Stablecoin, running the Stablecoin business for Paxos as it scales, third largest stablecoin issuer in the world, and was also during the past year while doing that, investing in Web3 companies, raised a small operator fund, $7.4 million called Sixth Man Ventures. We made more than 60 investments, average check size of $100,000 in two Web3 infrastructure and application companies. More recently, we raised our $125 million fund two for Six Man Ventures so we can invest at larger scale. There's just so many great companies, projects, entrepreneurs entering the space, existing in the space already and doing new things. And over the last couple of weeks, have founded with some other folks a really exciting project called LinksDAO with a goal to basically create the world's greatest golf and leisure community, a mixture of an online community with membership and participation, as well as a real world initial physical facility where folks can join, play, enjoy themselves, and then hopefully over time, build out a global network of those types of clubs.
And you still at Paxos now as well, or have you?
I'm an advisor to Paxos, yes, but not on a full-time basis. I know in crypto, we all do many things, but at some point, 3 full-time jobs just doesn't quite cut it.
I hear you, man. Listen, let's go back in time. Give me, how did you start this crazy journey? And then how the hell did you end up in crypto and decide to start a media business? There's a whole bunch there.
Yeah, so good question. So basically the first decade of my career, actually I was in media and entertainment. So I started at Disney, working in their corporate development, strategic planning group. So really got excited about working in broadcast, television and cable television early on, 2001, 2004. Worked at a startup in the media space, 2007 to 2009. Here in New York. I've been in the tech industry in New York for 15 plus years now. And then 2009 found myself at YouTube. So, selling ads for online music. So the first decade was all media. And then Google's great. In 2010, they allowed me, if you were performing well in an emerging platform, they would let you switch to another one. So I got to join the emergent Google Wallet team, which now is Google Pay, right? So now broadly, globally adopted. At the time, it was just an internal startup, and was able to switch from media entertainment to fintech at the advent of mobile payments. So I spent 3 years on that team. Was fortunate enough to meet some incredible entrepreneurs there, who later went on to Braintree Venmo, which was sort of before Stripe's time. It was the Stripe of the 06 to maybe 13 time period, and really exciting, making it easier to accept payments online. Customers like Uber and Airbnb worked with us. And so I got introduced to crypto then. We were going to add Bitcoin payments to the gateway. So if you took an Uber, if you booked an Airbnb, you could pay with Bitcoin.
What year was this?
This was 2013. And
wow.
So it was exciting. And, we had Braintree owned Venmo at this point. There were only about 30,000 monthly active users. And PayPal made a great spot. David Marcus was running it at the time, and he acquired Braintree for about $1 billion, a little bit less, and got Venmo with that. When PayPal acquired Braintree Venmo, they killed the plans at that time for Bitcoin payments in the apps. And I think it was the right call, given that today, for a host of reasons that we can talk about and we all know, high fees, low throughput, that hopefully changes with Lightning, but that's to be seen still 8 years later. It would have probably not been the right choice to have Bitcoin payments at that time, but I got excited about it. The promise of censorship resistant global instantaneous payments. And so I bought some Bitcoin in 2013 after meeting with the Coinbase team, after meeting with Balaji, who was at A16Z at the time, and working closely with the Coinbase team. So he, by talking 4 times faster than me and 4 times more intelligently, it was just like, oh my gosh, I've got to buy this stuff. Put it on the table for a bit. Started a traditional tech company that raised venture capital, is doing well in the mobile affiliate space. And then 2017, owned the Bitcoin, saw the other things happening. I was actually a bit of a Bitcoin maximalist, maybe more than a bit until about 2018, late 2018.
You're going to admit that on tape.
Yes. They don't want to have me anymore. So now everybody's like, you were never a Bitcoin maximalist. It's clear you're a shitcoiner. But nobody will have me. The maxis, the ETH heads. But bottom line is, I've always tried to stay curious. So in early 2018, when I wanted to enter crypto full time, because I just saw how dynamic it was, I saw just an incredible explosion of some of the best entrepreneurs moving into the space. I decided to move in, start the block, because every question I'd ask, and I'm not an engineer, every question I'd ask, I'd have 10 more questions. I couldn't answer them myself. And I realized no individual could. So wanted to bring together a team that could create these answers and help onboard more folks into the crypto ecosystem. So we raised a little bit of money, and then we proceeded to go directly into a brutal bear market. And so instead of the vision of the block being a great
startup life, people make it really glamorous. It's actually fucking shit. Most of the time, you're just terrified.
Exactly. Like today, with it's like every day there's another adventure. So basically what we end up doing is going pure, institutional, and developed a really healthy business. It just wasn't my passion, selling research, information, media. It's a noble one, and it's fantastic. It's a great business. So sold it last year to the team, and they're doing an incredible job. Over 100 employees. I'm sure you intersect with that team, and they're really, really wonderful. So I'm really proud of what they've built, and that I was able to recruit in such a great group of folks. But that was my introduction. I met so many people. It's just a wonderful thing. I mean, in the same way that you do, as you build an incredible platform, and it's positioned me really fortunately to know, who's doing what interesting things globally. And you can literally,
it's so privileged to be the epicenter of media in this space, because you get to see and talk to everybody.
Exactly. And we made a choice, the block, to basically, integrate the media and journalism piece with research, which therefore sort of negates your ability to invest as an entity. Whereas I've seen some other really amazing models, Delphi Digital probably standing out in that regard, where they were able to use their research to then start working with projects on tokenomics, and developed incredible expertise through the team, and now are sort of giants of investing, in addition to providing great research and counsel. Just different models. But my inclination was that I wanted to go that route and start to actually really get my hands dirty with teams versus just researching and reporting on them. And so that's how I ended up becoming one of these, evil Web3 VCs, as Jack has lately been, talking about. And obviously, I've casually known Jack for a number of years and his team, and have great respect for him. And I, understand some of the themes that he's talking about and the motivations behind some of his comments, even if they're a little punchy right now.
And then another person who intersected both our lives, Chad Cascarilla, and Emil Woods, obviously passed your way. They were the people who got me into Bitcoin back in 2012, 13. So,
geniuses. So, basically saw around corners, I think far earlier than any of us. We're amongst a handful of maybe a few hundred at most, a couple thousand people who did. And, not only, invested their time to learn, be curious, participate in the network, and stuck with it. The beauty of what they've...
I bought Bitcoin on Itbit back in 2013.
Exactly. So, and they're real entrepreneurs, right? So they went through 4 iterations of Itbit to Paxos. Some of the most amazing people in the ecosystem have been through that organization. And, now it's scaling into a crypto infrastructure provider across all asset classes, right? From cash, meaning stablecoins, to pure crypto, to securities, to commodities, that I think is going to make an incredibly meaningful difference in the world. So, Chad, not only, and Emil, seeing it early, but then sticking with it and staying so principled and continue to build. It's amazing.
Yeah, I've got Chad coming on soon, actually. I haven't caught up with him for a while. But before we dig into VC and the future and what's going on, let's talk about stablecoins for a bit.
Yeah.
How do you see the landscape developing there?
Yeah, so the concern I think that a lot of folks have is that stablecoins today, in the current regulatory environment, become, potentially as they grow, particularly as you see Tether grow, as you see USDC grow, Paxos issued stablecoins grow, that they become these systemic risk and choke points, for regulators to sort of turn off on ramps and off ramps. So I look at them a little bit differently in that I actually think stablecoins that are regulated give us the ability to get something that looks like crypto and runs on public networks into hundreds of millions and potentially billions of wallets.
I agree.
And I think that outweighs
everything.
Precisely. Once you've the flow is on ramp, via regulated stablecoin into regulated, app like a PayPal or a Facebook Novi. And then from there, they're all enabling transfers, and you'll have the ability to transfer out to a self-custodial wallet. And to me, that's the most likely on-ramp for the rest of the world, and helps. I think stablecoins help turn crypto from something that's purely an institutional playground today, and something that, frankly, even people like me who don't come from a markets background don't fully grok, to something that makes sense in everyday lives. International payments, remittances that are always on, low fee, and pegged to a stable currency. So I think they're really positive, but I understand the fears that, we're hearing a lot of hawkish comments out of the, predominantly Democratic, administration in the United States. There's some concerns around China's CBDC being, not a real stablecoin, like more of a surveillance currency. And so I think it's important, in fact, more than I think, it's critically important that we see, whether it be algorithmic, whether it be over collateralized, whether it be under collateralized with other models, stablecoins come into existence that are outside of, full regulation and state control. And there's a healthy market for those developing. I can say that I'm probably not the expert who should talk to you about, how the actual economics of those work. And historically, they've been risky and have not, most of them over the past 3, 4, 5 years haven't held their peg consistently. So they're still sort of almost risk assets for speculators. At the same time, I think, models like Terra's UST show some potential emergent promise towards moving towards, vibrant, decentralized ecosystems that have a stable coin at the core of how the network and the ecosystem operates. I think that's important. So that's exciting. And then, I think we're going to have a world with more than one stablecoin issuer of USD stablecoin issuer of size. Right now, USDC is significantly the leader. I think that'll change again as we get past institutional use cases to payments, remittances, et cetera. So extremely important to onboarding, something people understand. And hopefully our goal should always be to get folks to eventually move from those custodial wallets into safe, self-custody wallets.
Hey, if you like this clip, be sure to check out the full interview and more only on realvision.com/crypto. It's 100% free. Sign up now.